together. On 1st Jan 2016, ABC purchased a machine from HMT Limited on hire purchase. Details of the transaction are as follows. So they've mentioned, they've given us the details. And from this, what we see is that HMT ABC is the purchaser, HMT is the vendor. The details of the transactions are as follows. Cash price is 1 lakh. Rupees 40,000 was paid on the time of signing agreement. So 40,000 is the down payment. Balance is settled in three parts of 20,000 plus interest. So what is unique over here is that 20,000 that we are discussing over here, this is exclusive of the interest. There is the interest is not included here. Interest is charged at 5%. So there's an interest of 5% on the outstanding amount. Depreciation is charged at 10% according to written down value method. Prepare the journal entries for the above mentioned transaction. So let's start off with the preparation for this particular question. Okay, so let's look at this question together. So from the given possible details, we know that the cash price of the machine is rupees 1 lakh. Okay, we know that the cash price of the machine is 1 lakh. Now here we are not in a position to calculate the higher purchase price. The reason why we cannot calculate the higher purchase price is because here the part payment amounts which are mentioned, it is exclusive of the interest. Okay? It is exclusive of the interest, so because of which we are not able to calculate. So let's start off with the cash price of the machine. The cash price of the machine that is given to us in the question. The cash price of the machine that is given to us in the question is 1 lakh. From this, less down payment. How much is the down payment? Down payment is 40,000. Down payment here is 40,000. Now let's calculate the outstanding amount as on 1st of Jan 2016. So outstanding amount as on 1st Jan 2016 is 60,000. To this, we will have to add the interest for 2016. Now remember, interest that we are calculating, on the outstanding amount. So how much is the outstanding amount? Outstanding amount is 60,000, and interest is calculated at 5% on this. So 5% on this is 3,000. So 5% on this 3,000, it is 3,000. It works out to be 3,000. So now let's calculate the outstanding amount as on 31st December 2016, and this works out to be 63,000. Okay, this works out to be 63,000. Now from this, we have to calculate the first part payment. So part payment for 2016. So part payment for 2016, how much would that be? That would be 20,000 plus 3,000. Now, how did we get 20,000? How did we get 3,000? So we got 20,000 plus 3,000. So this works out to be 23,000. Okay, this works out to be 23,000. Now let's calculate outstanding amount as on 1st Jan 2017. So this works out to be 40,000. Okay, this works out to be 40. Now to this, let us add the interest for 2017. So interest for 2017, we will have to calculate on the outstanding amount. Outstanding amount over here is 40,000, and let's calculate the interest at 5% on the outstanding amount. The interest on the outstanding amount, that works out to be 2,000. Okay, that works out to be 2,000. So from this, let us calculate the outstanding amount as on 31st December 2017. So this works out to be 42,000. Now To this, let us subtract the part payment for 2017. 20,000 plus 2,000. This works out to be 22,000. Now, outstanding amount as on 1st Jan 2018, and the outstanding amount as on 1st Jan 2018, this is 20,000. To this, let us add the interest for 2018, and the interest for 2018, this works out to be 1,000. So outstanding amount as on 31st December 2018, this works out to be 21,000 less part payment for 2018. So part payment for 2018, this works out to be 20,000 plus 1,000, which is 21,000. This is 21,000. And so with that, we have actually, this has come to an end. So outstanding amount is 0. So with that, we have completed the computation of interest. We've also calculated the computation of. Now, in this case, there is no requirement for us to go about with the calculation of part payments, cash price and the part payments. Reason being, we know that 20,000 that you pay as 20,000 is the cash price that you're paying every year, and that entire amount is going towards the price of the machine. Okay? So we need not calculate that. Now what we have to do is we have to go about with the calculation of depreciation. So remember, which method are we following over here? We are following the written down value method. So depreciation is calculated at 10% of written down value method. Written down value method. So let's start off with this. Cash price of the machine. Cash price of the machine in 2016. So cash price of the machine in 2016 is 1 lakh. Less depreciation for 2016. So depreciation for 2016, 10% of this works out to be 10,000. This works out to be 10,000. So cash price of the machine in 2017, 90,000 less depreciation for 2017. So depreciation for 2017 is 9,000. Now let us go about with the cash price of machine in 2018. So cash price of the machine in 2018 is 81,000 less depreciation for 2018. So 10% of this, that will be 8,100. So this works out to be 72,900. So cash price of the machine in 2019, this works out to be 72,900. This works out to be 72,900. So we are interested in the depreciation only for 3 years. The reason being, the other years we will not be passing the journal entry. So with that, we have completed the calculation of interest, and we've also completed off with the calculation of the depreciation. So I request all of you to look through this. Now that our calculations are over, let's start off with the journal entries. And journal entries, we are preparing the books of accounts of the purchaser, and the purchaser is Mr. ABC. The very first entry that we will be having, that will be on 1st of Jan 2016, and this will be for the down payment. So machine account debited, amount is 40,000. To cash account, amount is 40,000. B, payment of down payment amount. Payment of down payment amount, and that works out to be 40,000. So we have completed the very first entry. The next entry that we will be having, that will be on 31st of December 2016. So the very first entry that we have to show over here, this would be for the fact that the down payment is due. So this will be machine account debited 20,000, interest account debited 3,000, to HMT account 23,000. B, the part payment for 2016 is due. 31st December 2016, HMT account debited 23,000 to cash account 23,000. B, payment of part payment for 2016. So we have completed this. Then 31st December 2016, the very first entry that we would be having, that would be for charging depreciation. So that will be depreciation account debited, and depreciation amount in this case will be these amounts. Okay? So here to be 10,000 to machine account 10,000. B, depreciation charged for 2016. 31st December 2016, profit and loss account debited. Now, what are the expenses we have to transfer? What are the expenses we have to transfer? We have to transfer interest account, interest 3,000, depreciation. So these are the two direct expenses that we have to. So this will turn out to be 13,000. B, transfer of expenses to profit and loss. Okay, so with that, we have completed the journal entry for the first year. Now let's move on to the next year. So the next year, the first set of entries that we will be having, that will be 2017. So machine account debited 20,000, interest account debited 2,000, to HMT account 22,000, being the part payment for 2017 is due. Okay, so now next what we will be having is 31st December 2017, HMT account debited 22,000 to cash account 22,000, being part B, payment of part payment for 2017. 31st December 2017, cash account debited. Yeah, sorry. So we have already completed. So the next entry would be for charging of depreciation. Depreciation account debited 9,000 to machine account 9,000 being depreciation charged for 2017. 31st December 2017. Profit and loss account debited. Profit and loss account debited to interest account. Interest account, the amount is 9,000 to depreciation account. Sorry, I'm so sorry. The interest amount is 2,000 and then the depreciation amount is 9,000. And when we work out the total, this together works out to be 11,000. So that we have completed. Now let's move on to 31st December 2018. So the very first entry that we would be having over here, this week would be for the part payment becoming due. So part payment becoming due, how do we show that? We would show that by machine account debited, amount is 20,000. Interest account debited 1,000 to HMT account 21,000. B in part payment the part payment for 2018 is due. 31st December 2018, HMT account debited 21,000 to cash account 21,000 being payment of part payment for 2018. 31st December 2018, profit and loss account debited to interest account. Amount is 1,000. Depreciation account okay, so there was one particular step that I missed over here, and that was the depreciation. So 31st December 2018, we have to charge depreciation. So depreciation account debited, and depreciation for third year is that would be 8,100. So 8,100 to machine account 8,100 being depreciation charged for 2018. And then here depreciation is 8,100 and together this works out to be 9,100 being transfer of expenses to profit and loss account. So with that, we have completed the journal entries for this particular question.